morning and welcome to Thursday edition of Business Morning. Thank you for joining us. I'm Chimeze Obi Iwago. Let's look at some stories making headlines. The issue of population explosion in the country was brought to the fore yesterday at a forum on sexual and reproductive health in Abuja. The chairman of the National Population Commission, Mr. Issa Kwara, is expressing concerns over alleged zero allocation for family planning in the proposed 2022 budget. He called for a rethink by policymakers to avert the threats posed by the nation's increasing population. Let's take a listen.
This meeting, organized by the National Population Commission, is bringing experts together to discuss how to control the nation's growing population, which is estimated at over 200 million.
Violence and harmful practices.
2 years after population and health experts converged in Nairobi, Kenya, to foster partnerships to achieve the 2030 agenda, which involves the zero preventable maternal mortality, zero unmet need for family planning, and zero gender-based violence and harmful practices. Experts are of the opinion that just a little result has been achieved.
If we want to end preventable maternal death, access to family planning and child spacing is critical. Did you know that if we meet the unmet need for family planning and ensure universal access, preventable maternal death can be reduced by up to 25%?
The situation is further made worse as appropriations for family planning are not captured in the proposed 2022 budget.
I wish to use this platform to further draw attention of all stakeholders to the seeming omission of specific funding for the family planning in the proposed 2022 budget and the threat of population explosion in Nigeria. This calls for a huge concern and urgent action to forestall the likely setbacks that might derail progress towards significant demographic transition.
Statistics from the United Nations Population Fund show that the use of family planning procedures in Nigeria between 2013 and 2018 grew marginally to about 2.2%, while violence against women is on the rise. Experts want concerted efforts to address these gaps.
Nigeria has shown that we have the capacity, the capabilities to develop insights, strategies, guidelines, policies that will transform this country to a great nation. However, there seems to be a mismatch in action. And this is why the association is very worried.
Hopefully, resolutions reached here will help in the attainment of the transformative Agenda 2030, which seeks to prevent maternal mortality, violence against women, and zero unmet needs for family planning.
And Total Energies Exploration and Production Nigeria Limited has achieved a new milestone in the oil and gas sector as it successfully stages the sail away of multi-million-dollar facility for the Ikike oil field development project. The project estimated to produce 32,000 barrels per oil per day. Let's watch this.
The Ikike development project of Total Energies is yet another landmark achievement by a company that has over the years shown consistent effort in blazing the trail in the oil and gas business. Here at the fabrication yard of Saipem Contracting Nigeria Limited in Rivers State, a sail-away ceremony is held for the Ikike reservoir as the company seeks to increase its oil production capacity.
It was launched by the NNPC TEPNG joint venture with a number of key objectives. So we want to develop, these Ikike reservoirs as a tie-back to an existing facility, to the M&M facility, with a production of over 30,000 barrels per day when it starts up. 5 wells, including some water injectors. But I think it's important for us as well that we capitalise on some of the lessons that we've learned in our previous projects, the OFOAM Phase 2 project, and also the OML 58 project.
The construction of jackets, modules, topsides and risers, all in Nigerian yard, has no doubt contributed greatly to the nation's local content development initiative. Hence, The Local Content Development and Monitoring Board sees greater opportunities from this achievement.
Apart from the impressive tonnages associated with the tripod jacket, drilling deck, and topsides, it is noteworthy that the platform is designed to be fully unmanned and remotely operated. All that happened in this country. Total has answered the question that behind every dark cloud, there is indeed a silver lining.
This level of success achieved energizes Total Energies to announce its new vision for Nigeria.
And again, thinking about Nigeria, I mean, Nigeria is the largest economy in Africa. So I mean, it's clearly an important market for Total as well in the electricity business. And in fact, we were honoured last week that along with our CEO, we had an audience with the President of Nigeria in Paris, and that was one of the points that our CEO was making to the President, that we are interested as well in continuing in oil and gas, of course, but also in developing an electricity, a renewables electricity business in the country.
Total Energies Exploration say they are not limiting their celebration to the successful fabrication and sail away of the Kike offshore project, but will soon begin infrastructural projects in designed areas, in addition to the training of graduates to acquire specialized skills.
In the meantime, the Nigerian National Petroleum Corporation has signed a 5-year agreement worth $1.04 billion with the Africa Export-Import Bank to finance petroleum exploration and boost crude oil production in the country. The agreement, described as the biggest so far, was concluded at the ongoing second Intra-Africa Trade Fair in Durban, South Africa. According to the arrangement, the NNPC will enter a forward sale agreement within which it will deliver 35,000 barrels of crude oil per day. It further states that the proceeds of the facility will boost tax revenues, foreign currency receipts, and create thousands of jobs in the oil and gas refining value chain. And of course, on the global oil market space, U.S. oil was under pressure in early trade today, adding to an overnight plunge on a report that the United States was asking major oil consumers like China and Japan to consider a coordinated release of oil reserves to lower prices. The bid by the U.S. administration to shock markets comes as inflationary pressures, partly driven by surging energy prices, starts to produce political backlash as the world fitfully recovers from the worst health crisis in a century. U.S. crude was down 62 cents at $77.74 a barrel, having fallen 3% overnight. Brent crude fell 39 cents to $79.89 a barrel after falling 2.6% to the lowest close since early October on Wednesday. Prices hit 7-year highs last month as the market focused on the swift rise in demand that has come with lockdowns being lifted and economies recovering against a slow increase in supply from the Organization of the Petroleum Exporting Countries and its allies. U.S. producers have also been reluctant to overspend on drilling after they were punished by investors for gorging on debts to pay for new drills. The International Energy Agency and OPEC have said in recent weeks that more supply will be available in the next several months. OPEC Plus is maintaining an agreement to boost output of 400,000 barrels per day every month so as not to flood the market with supply. Well, to talk more on the latest developments on the oil market and other commodities market space is Dumebi Iyeke, research analyst with Financial Derivatives Company, and that will be in a moment. Keep it here with us. This is Business Morning. All right, we're being joined by Dumebi Iyeke, one of the research analysts with Financial Derivatives Company, to look at some of the developments in the commodities market space. Of course, Dumebi, good morning. Good to see you. And of course, we'll have to start off with the latest on the global oil market space. We're seeing the U.S. trying to pull their string there, trying to ensure that the prices of oil get down because of their inflation going up. So what do you guys at the MDC make make of this latest development we're seeing in the oil space?
I mean, it's a reaction, obviously, to the fact that they have made several calls, to OPEC to significantly increase supply so that global oil prices reduce. But, OPEC hasn't really been forthcoming in that regard. OPEC Plus is more conservative in its production, in its supply strategy to make sure that prices do not dip as much as, what happened last year. So, with the fact that the global economy is recovering, demand is recovering, and there are also fears of inflation. For example, UK inflation is at a decade high of 4.2%, same as the US, China as well, recording high levels of inflation. India as well, raised concerns, and this is, basically on the back of rising energy costs for a lot of these countries. So, US, like you rightly said, is trying to pull its strings, to get a lot of people on board. Let us do this, and that's because China already had hinted that it would, release oil from its strategic reserves to taper down, to taper prices. So it's just to, make prices, go lower.
Some analysts are of the view that perhaps this release of strategic reserve may really not be the lasting solution to what they are trying to do, unless OPEC or the shale oil is being, increased.
The thing is, for a significant thing to happen, there has to be some move. With just this information alone, made oil prices trend lower. How much more if they actually decide to do something? And the countries that we're talking about are the top importing countries, top oil consuming countries, and they are very strategic. They are very strategic with their oil importation. They have reserves to last them for years. So for them to say this is what we have to do right now to make sure that we don't have runaway inflation, to make sure that we're able to reduce energy costs and keep prices, domestic commodity prices, at a very significant level. For them to do this, we're clearly going to see oil prices, reduce. It might not be as significant as if OPEC, comes on board the increase in supply train, but I mean, it will do something for them. Remember, we're entering into the winter season. Natural gas prices are really high, and so a lot of these countries, are diverting their demand towards oil. So they are trying to have like a win situation. They don't want to be on a lose-lose situation where they can't purchase as much natural gas and at the same time they can't purchase as much oil.
Yeah, but we have seen the COVID cases rise in Europe, and that's also posing some kind of a risk to demand.
Yes, but considering the fact that when you weigh it, the increase in COVID cases is not as much as what is happening right now with the recovery in the economy. I mean, if we compare this to last year, it's not as much, and clearly there's actually a lot of rebound in the global economy. Economies are not reimposing lockdowns, even if some have hinted that they could reimpose lockdowns, compared to as much countries that were doing that, last year. There's a huge difference. So there's a huge difference from where we're coming from and where we are now. And the truth of the matter is that so many countries, especially the US, China, even India, are fast, recovering from a lot of things.
How low?
Demand.
Yeah, how low do you think oil price will probably go with what the US and China are trying to do?
So I mean, if they decide to do it, we could see oil prices reduced to about like 75 to 79, and that's because this might not really shake the market as much as OPEC increasing supply significantly.
And I mean, when this happens, of course, has some implications
for Nigeria.
But I mean, how much of that are we going to feel? Since I mean, even at 75, we're still above the budget.
So definitely, we'll still see some increase in oil revenue, and that's because oil prices are going to be like, let's say, around $75, $76 per barrel, and that's still good news for us. Our benchmark, even for the 2022 budget, is about 55, so 52, 55, yeah. So it's still, Nigeria is still, going to be cushioned from whatever oil price shocks that could hit
But we're
us.
seeing our reserves decline.
Yeah, that's because the CBN is intensifying its effort towards increasing forex supply at the official window.
But is that making much impact?
I mean, we can clearly see that demand is still significantly more than supply, but with the CBN intensifying its efforts, we're going to clearly see that within this festive period, normally during the festive period, forex demand is usually high. A lot of people are taking, are demanding for forex for travel expenses and stuff. So we will definitely still see that increase in demand. The expectation is that supply should be able to somewhat, service the demand so that the naira doesn't crash as much as what happened in September when the parallel market rate was as high as 580.
All right, now with what we're seeing in the global oil market now, and of course with the energy crisis,
yes,
the rising COVID cases
yes,
in Europe, the rising inflation, even though our own
yes,
inflation is coming down. The Monetary Policy Committee will be meeting next week. How do you think that would actually affect their decision?
Okay, so let's look at it from the domestic, happenings first. So with the fact that inflation is down, GDP numbers will be released before the meeting. Clearly, the expectation is that growth will still be positive. Most likely, the MPC would maintain status quo again because of the fact that the inflation, on a data level, is declining. GDP is still positive. The expectations that, and the main consideration would be that if they decide to maintain status quo, which is very likely, it's going to be hinged around the fact that the economy is recovering. We're seeing an increase in business activities. Consumer demand is somewhat, it's better off than what it was a few months ago or even last year. So those are the things that the MPC are going to look at, and they would likely maintain status quo again.
All right, we're gradually coming to another close of a week.
Yes.
So it will take us through the domestic commodities price movement so far, and of course the outlook.
Yes, generally we're still seeing commodity prices trend higher. Cooking gas is still really high. It's expected to increase again. The price of beans is still high. Pepper is still high. Onions is really high, and that's because of seasonality. Right now is the planting season for onions. Vegetable oil is still high, but in general, the expectation is that these prices are still going to remain this way, and that's because we're fast approaching the festive season. There's going to continue to be an increase in demand. The issues affecting the supply of food within the domestic market, ranging from insecurity to the exchange rate pass-through to supply chain disruptions, are still very pertinent and will continue to affect commodity prices.
All right, thank you very much, Dumebi. We appreciate it.
Thank you.
All right, that was Dumebi Yeke, one of the research analysts with Financial Derivatives Company. We take a break now. When we come back, we look ahead the inaugural Nigerian Capital Market Conference. Do stay with us. Nigerian Exchange Limited is ready to host the inaugural Nigerian Capital Market Conference. The conference, which will happen on Tuesday, November the 30th, has the theme, The Future Ready Capital Market, Innovating for Nigeria's Sustainable Recovery. Well, to tell us more about this conference and its importance towards greater capital flows is the Chief Executive Officer, Nigerian Exchange Limited, Mr. Temi Bokbola. Thank you very much, Mr. Bokbola, for joining us on the program. Good morning.
Thank you for having me. Good morning.
Now, the Future Ready Capital Market, innovating for Nigeria's sustainable recovery. That's the theme of your conference. Why is this theme apt at this time?
Thank you very much for the question. The reason we've chosen this theme, and perhaps also the reason we're doing this conference, is really because when we take a look at the collective challenges that face us all as a nation, which of course you have the government trying to resolve, you've got different parts of the nation trying to resolve, One of the things that we find is that the capital markets is an often overlooked potential remedy for some of these problems. And it's one of the reasons we've thought to elevate the discourse around the capital markets. And of course, tied with that is that if you look really at the just very foundation of our demography as a nation, it's a very youthful population. And that speaks to the future. It speaks to hope as well. And one of the things that we're looking to do with this conference is really to try to unite all of those themes. So looking through to the future, connecting that with all of the problems and challenges that we face today, and looking to really spend time as to how the capital markets could be a facilitator at some of these problems.
Yeah, sure. Now, driving government economic growth plans using the capital market, that's one of the key topics to be discussed at this conference. We know the government is low in revenue and has continued to borrow to fund its budget. What key issues are expected to be raised on this particular topic at the conference?
So really what we're trying to do here also is similar to what I said earlier. If you think about the challenges facing us, everything from perhaps power, unemployment, we're looking for stronger economic growth. We're looking for increased capital just to drive all that we're doing. The capital markets really could be a way to resolve that. So as we explore this subject, we'll be looking, for example, at each of these themes and looking, for example, at global best practices. You would find that Nigeria and its evolution today is about 20 years behind where India was. How were they able, for example, to solve some of the problems that they have, that they had at the time? So we'll look at things like that. And then, of course, we'll bring it into more practical things, really to say, well, you know, as the government, besides just funding, for example, what we find is that listed corporates, they pay more taxes, for example, which is helpful for the government. They hire more people. There's more transparency to their operations. They're held to higher standards, as an example. You find that corporates who go through sort of capital markets as well really then also key into a lot of these key sort of government-type initiatives. So again, in this panel, which is really then focused more around the government, we'll be exploring everything from funding to some of these bigger macroeconomic themes that we think the markets can help us to resolve.
Right, and of course there is the issue of driving capital market recovery through policy advocacy, and of course the role of the private sector in growing the capital market. These are all, you know, part of the topics to be discussed in this conference. So for these particular topics, what do we hope to hear?
Okay, so I think that the way the flow of the conference is set up is that first and foremost, we will explore what can the capital markets do for governments. Then we'll also explore what the capital markets can do for the private sector. We'll be having, you know, industry giants discuss how, for example, they have accessed the capital markets to drive their growth, to drive operations. And then we'll explore these two broad areas. The question then is, what can we do to strengthen our capital markets, to some will say revive our capital markets? And one of the things that you find there is that to do that, it's really also tied back to policy. Policy really around what the key benefits, for example, that corporates will derive from being listed, policy around how ease of coming to the markets to raise capital, policies around just innovation also around the capital markets. If you look at a lot of our rules and regulations, many of them also could be due for amendments that are in line with current global economic norms and trends. So that's really how we see this going, such that at the end of it all, I think across both government and the private sector, there'd be a sort of very shared understanding as to whose role is what and how we drive that.
All right. Now, industry players have been calling on the government to securitize some of its corporate assets. You recently announced a partnership with the Nigerian National Petroleum Corporation. Are we seeing a future listing of some of the government-owned corporations like the NNPC on the exchange soon?
Yes, indeed. This is part of the work that we are doing. And it really speaks, for example, to the heart of some of these themes that I spoke to earlier. If you have corporates listed, drives governance, much stronger levels of governance, drives transparency, and a lot of the other benefits that I mentioned. So, one of the things that you find in a few other countries is how you try to get the government to focus more on administration. And just leave, I guess, to the rest of the wider economy, to the private sector, as it were, other parts of just operability. So we do think, and this subject, to be fair, has been discussed quite widely before around the nation, but it's time to shine, I guess, a new lens on it. So yes, indeed, opportunities for privatization of government assets, opportunities to leverage, government resources, whether those are through partnerships with the private sector, whether those are through just outright access to capital markets. This is really the direction that we think the government should be going.
Yeah, so what policies has the exchange put in place to encourage, participation from individuals?
Are you referring to the conference, or are you speaking more broadly?
Pardon me?
Are you referring to individuals?
No, talking about some of your policies that you have tried to put in place to encourage even individuals in coming to the market.
I see. Okay, thank you very much. It's a very good question. I spoke earlier about just the demography of Nigeria. About 85% of our population is under 20 years old. And one of the things that you find is that a big chunk of these individuals are not investing today. If you look at the makeup of the investors today across the capital markets in Nigeria, they tend to be concentrated around the 50-year-old mark. Now, the question then is, what do you need to do to attract this new class of Nigerians? There are two things. One is ease of access to the markets, and that needs to happen through technology. So we need to get our markets to a point where, the millennials, the younger demography who spend quite a bit of time on devices can also find us there and relatively easier. So that's one thing that's keeping us extremely busy. It's one of the things that we'll be discussing at this conference. The other, of course, is around products. It takes you back to the fundamental question that for investors to come to your exchange, they must find products that meet their investment needs and investment criteria. So for us as an exchange, we are spending quite some time really around just product origination, around innovation of products to make sure that things that are on the exchange are fit for purpose and will meet the needs of these people. We think that if we can do these two things, of course, work on a few other things on marketing. For example, people need to know that the capital markets really are a viable source of investing, for example, which is why we're doing a conference like this. We'll see a lot more of these individuals come through.
All right, Mr. Wobola. Now, the year is gradually coming to an end. I remember in 2020, the Nigerian stock market was adjudged the best. So are we likely to see that happen this year?
Thank you for that question. Well, first and foremost, the performance of markets is usually not in the hands of exchange operators. I think it's important to make that point. Of course, it's nice for markets to perform well. The truth also, though, is that in markets like ours, it's a two-way street. There's volatility. Markets go up and they come down. We try to focus more on longer-term trends, really, particularly for example, equity investments in this case. And of course, even fixed income investments. Back to the demographic discussion we had, it's really a long-term view that most markets in Nigeria should take. Of course, speaking about the exchange, what we've seen as far as performance is concerned is that the year started very strong. In line with the macroeconomic conditions, we saw a contraction, we saw a very much reduced level of activity, but we've had a very strong Q3. And I think we're going to have a very strong Q4. The momentum, I think the wind is on our back, as it were. So I think we'll finish the year, at least the current trend, it looks like potentially double-digit returns, which should be a good sort of testament on the back of what was a very strong performance last year, as you say.
I want to share in that optimism there. Anyway, finally, before I let you go, so who are we expecting at this conference?
Okay, so the Vice President of the Federal Republic of Nigeria will deliver the keynote address. He is confirmed. We have the Speaker of the House of Representatives also. He is confirmed as a guest of honor. The chairman of the event is Alhaji Abdul Samad Rabiu of Bua Group. We have quite a few governors confirmed, governors of Ekiti State, Edo State, and that's not in any particular order. We have the finance minister who will be joining us as well. We have director generals of several agencies of government who will be joining us, captains of industry, fund managers, capital market operators. So we do think that it's the right quality of really needed participants for these subjects. It's a hybrid event. So there is the physical event. Most of these people have mentioned are joining us physically, but there is the opportunity for those who would like to join us online and through Zoom to also participate. We of course also have His Highness the 14th Emir of Kano, who would also be joining us to give an address.
Thank you very much, Mr. Popola, for your time this morning. We do appreciate it. Enjoy the rest of the day.
And you too. Thank you for having me. Thank you.
You're welcome. Temi Popola is the Chief Executive Officer, Nigerian Exchange Limited. While still talking about the market, let's see what the opening calls are like there with Anyete. Hey, Anyete, back in the red.
Yeah, good morning, Jimmy. Back in the red, that's just what you say. But you know, what could be red for some people actually means green for some people, for the other people, especially as far as market investment is concerned. Of course, you know, the equities market, it comprises retail investors, institutional investors, pension fund managers or administrators. So it's quite an array of investors that you have there. And then, of course, let me bring up to speed with what happened at the market yesterday. Back in the red, 0.22%, and that translates to about 49.21 billion loss in midweek trading sessions at the NGX yesterday. Of course, it was a negative market breadth when you talk about, you know, the profit taking. 20 equities contributed to that loss, the red color that you see on the screen there. Of course, we also have the month to date where we're still positive. It has been reduced a little bit to about around 3%. Year to date, we're still positive, 7.8%. So you can say that the market is still doing very well, but in terms of profit taking as of yesterday, that's just what we saw. Now, over to the sectoral performance. Industrial goods was the only green man there. All the others were in the red territory. But of course, you know, the market always has a way of, you know, trying to make a comeback. Although we've been having a seesaw movement in the last 3 sessions this week. Then, of course, when you take a look at the activity there, it's still another red color in terms of volume and value of transactions. But the number of deals there, 4,230 deals is what we had as of yesterday. Now, let's flip over to the fixed income market. It was a bearish performance for the bonds market, but it's quite interesting to know that the debt management office, which you know, all the markets were looking out for that, they had offered 150 billion worth of debt instruments, but guess what? What was sold was 255 billion worth of debt instruments to investors. So that shows you that they had much interest in this the DMO's debt auction. So now let me take it back to the stock market, you know, before we came to the fixed income market, and to tell us more about what happened yesterday and then what to look out for today. Let's speak with Mohammed Kaide, who's a stockbroker and head of securities dealings at APT Securities Limited. Thank you for joining us, Mohammed.
Good morning, everyone.
Yes, good morning, Mohammed. Yeah. Okay, so we've been having a kind of a seesaw movement at the equities market this week. And then, of course, you know, the market, we've been seeing a movement from the fixed income securities into the equities market. So can you bring us up to speed with that, as well as who are the movers in the early trading session for today?
The market, as you have rightly noted, has been up and down movement, and that's the oscillation in the market. That is caused by the market oscillation in the market. And then this morning, as we have this morning, the stock is opened about 40 minutes ago. Market opened about 40 minutes ago, and the early gainers, as we speak now, we have not really seen a kind of trade that will warrant the direction of the market right now as we speak. But that is not to say that we've not had some stock that have the as we speak now. The top business trading Academy, Sex Bank, and GT. So they've just gained a. Now, the thing is that market just opened 2 minutes ago, and right now the market has lost points right now. And the most is about 3 or 4 of them right now have access by the bank. The gainer that we are currently in the market too, has also have a gain of about 3 kobo. So, the level of activity to know what exactly the direction of the market will go today, see that of activity down with level of growth.
Okay, sorry, Mohammed, I guess I may have to cut you a little bit there because the network is not too good on your side there. But thank you for bringing us up to speed with what's happening at the equities markets at the moment. So that was Mohammed Kaide, stockbroker and head of securities dealing at APT Securities Limited. So we were talking about the market, but before I close, this is what the fixed income market looked like yesterday. For the treasury bills, it was quiet, but some activity. Over to the central bank's securities, central bank special bills. Now the attention is now been shifted to the 3rd of January 2022, which had 2 number of deals there, valued at 3.5 billion naira. Then over to the open market operations. Of course, there was 72.5 billion naira worth of instruments that matured, and then of course 25 billion naira worth of that OMO maturities have been floated today. So that's what that market is turning out as at early today. So we'll look out for how it turns out at the close of today's trading session. Then over to the smaller unlisted securities market. It was unchanged. The same figure, what you had on Tuesday is also what you had as at Wednesday. Then, of course, the volume of transactions, 3,058 in 4 deals at 245,000 naira. So that's the wrap for the market. We will look out for how it turns out at the close of Thursday's trading session.
Absolutely, Anyete. It is our business to continue to track the market, and that's what we'll continue to do. Thank you. All right, we'll take another break, and when we come back, we cross over to London. All right, let's talk to Juliana there in London. Good morning, Juliana. Good to see you. Amazon says it will stop accepting Visa credit cards issued in the UK from January the 19th. Why is this, and how is that news being received in London?
Good morning, Chimeze. It's a kind of big story. In fact, some economists are saying this is going to be a huge turning point in the shift for online payments. There hasn't been much reaction in London, but overnight on the New York Stock Exchange, Visa shares plummeted by about 6.6%. And this is because Amazon are not really happy with the fact that Visa credit cards in the UK have hiked, I believe, between a 1% and 2% charge on the amount they are going to charge customers per transaction, of course, this isn't exactly coming out of a customer's pocket. Amazon have to put this within the price of their items, and for them to remain competitive, they said they're just unable to do so. A lot of analysts are comparing this to a similar spat that took place between Walmart and Visa a few years ago. No response from Visa yet as to whether or not they're going to withdraw these charges. This again goes back to Brexit and the EU. Of course, this is only affecting Visa credit card holders in the UK, not Visa debit card holders, and this is yet to be replicated across the world. But when Britain did leave the EU, there were some laws that prevented transactions from being hiked up that they no longer have to submit to, which is why this is happening. There's still a lot of information to chew on when it comes to this Amazon Visa story. So as soon as I get more information and I'm able to digest it properly, Chime, I'll make sure I update you and the viewers.
Absolutely, and I'm sure Ladi will be looking forward to hear more of that later in the day. In the meantime, House of Fraser has announced plans to close its flagship store on London's Oxford Street in January. That's another blow to the UK's prime high street.
Yeah, it is. I was just discussing this actually behind the scenes, and it is a blow because, of course, the House of Fraser store alongside the now defunct but was Debenham store, John Lewis, Selfridges, they were really the flagship stores across Oxford Street. People would fly from across the world so they could come into Oxford Street and grab their hands on an item in those stores. But of course, as we've been discussing, Chimmy, for what feels like forever, but at least the past couple of years, Britain's high street is changing. It's no longer as viable as it was. We've got the likes of ASOS, Pretty Little Thing, Boohoo.com, these online titans selling fast fashion for as cheap as you can get it, and are dominating the market, and it's really difficult for these bricks and mortar stores to stay alive. I do have a statement here from the Frasers Group saying that it's with regret that we have been served notice by the landlord to close House of Fraser Oxford Street following granted planning permission to redevelop the site. Since acquiring House of Fraser in 2018, despite challenges faced, we've worked collaboratively with the landlord to keep the store trading 3 years longer than what was initially proposed by the previous owner. We're not sure how many jobs were lost. Certainly, I believe maybe about 500 jobs. Hopefully, this is the golden quarter. House of Fraser and Mike Ashley's Frasers Group will be able to scrape back some pennies and pounds to take them into January. But yes, it's another major blow to the British High Street.
Well, I guess it's a case of quit notice. Anyway, we look forward to getting more update from you later in the day.
Thank you.
Okay, let's look at the crypto market there. Ladi is all set.
Yeah.
What do you have today?
Well,
how's the market looking like?
Well, yesterday was a bloodbath, but today is looking quite stable. We'll see some fresh money coming in there with market cap raging up there by a little 1.35% at $2.61 trillion. And we see the volume down about 11% this morning, and Bitcoin dominance, we see it still ranging between the 42 to 44% at this point. Price of Bitcoin, it maintained the 59K level. Now trading at 59,800. It's up about 0.50%. We see traders starting to come back into the market, leaving some of those stable coins there. We see 24-hour volume, $37.80 billion traded this morning in Bitcoin. Ethereum holding up above the 4,000 range. It's up 1.92%. Volume traded, $19.20 billion traded this morning in Ethereum. We see the alts, top alts by market cap there. We see it's in the green with BNB there, trading at $572. It's up 1.41%. Cardano trying to get back above the $2 mark. They're up 1.26%. So we're seeing soft bounces across board this morning. Solana there, $212 is up 0.10%. And we see XRP, the biggest mover on this list. It's $1.11 up about almost 3%. Let's bring in Olubukola Umaru now, our digital market analyst, to bring us up to speed. Great to have you on the program. Good morning.
Good morning.
Yeah. So, Bukola, I see what's trending is Staples Center changing its name to Crypto.com. Crypto.com being a Singapore-based crypto exchange. This is quite big news for the crypto ecosystem.
Oh, yeah, of course. I mean, it took crypto investors by surprise because, crypto is getting more into the mainnet. And, I mean, it's a big one for Crypto.com. Having to have quantitated like the likes of Binance, the likes of FTX exchanges. So I think that is bringing Crypto.com into the faces of crypto investors to use their platform. And also, according to the CEO, Chris Mazulek, saying that using Staples Center, which is an iconic event center, so it's going to allow a lot of people who are new to crypto or who don't know crypto yet get to know crypto and also use their platform. So it's really a big thing for the world to get to really know about crypto.
Well, who do you think this is impacting more? Is it the CRO price or the total market or Bitcoin?
It's actually affecting CRO. I mean, for someone like me who is an investor of the CRO token, I literally forgot about it because there was really nothing happening with it, and sometimes I just open the app. But with this big news, I mean, it gave it a push. I mean, it has about, I think, 200% push since that news. So it had more impact on the CRO token than the Bitcoin or the crypto market generally. I mean, that is basically the reason why Crypto.com is doing that. To make people get to know about their platform and get to invest in their tokens.
Right. Quite a big one there. But another trend right now is play-to-earn tokens, where you can play games and actually earn money. How's that going?
Oh, this is like the most awesome and lucrative thing happening right now. I mean, the GameFi, the gaming crypto system is like growing day by day. I mean, right now we have over 2 billion game users. I mean, playing games, using the virtual world, the use of metaverse. I mean, it's so interesting when you can play games, do your hobby, and make money. You're buying. So most of these tokens that gaming tokens are on the metaverse, you have to buy them to play the game and earn money. So these games get to increase in their value. That's why you see most of them doing 10x, 20x in weeks and months. And you're wondering why. It's because people are getting to play games. They're getting to use the virtual world. Like, you can feel the game like you're playing the game in real life, even though you're playing them in virtual world, and you're making money with it.
Quite interesting. Well, I guess I'll be looking to playing games more now. All right, Bukola, thank you so much.
Yeah, thanks for having me.
All right, let's look at my coin to watch there. I'm seeing BNB. Last time I gave this, it was trading above $600, but obviously Bitcoin had that major pullback. It's fallen down to about $572 per coin. Well, it got bought up pretty fast, after getting that dip. And we see it's trading close to the RSI, the 60 range, and might have a double jump there. Top 5 going to see VGX. So, Chimi, if you play games, it's time to earn money playing games.
I mean, I love that. I mean, playing games and earning money perhaps is something I would like to look
explore
into there. And I must say it's quite refreshing to have you speak to a woman on your segment.
Right,
I mean, it has always been men. I push for women. So whatever a man can do, a woman can do better.
Women empowerment.
Absolutely. Okay, well, that's it on the program for today. Thank you for watching. I'm Chimeze Obiwagwa, and don't forget to join us later this afternoon by 1:30 on Business Incorporated for more updates from the world of business.